Hey guys, welcome back to another episode of my TFSA portfolio. Today we're going to be talking about Bitcoin and the Bitcoin ETF because this has been a major mover in my portfolio recently. And it's been a mover to the downside, especially as Monday comes around and Bitcoin's tanked because of this weekend's events. It's going to mean even more red for my portfolio. So I'm just going to share with you guys what are my thoughts around this drop in Bitcoin and what I plan to do next. Am I going to continue holding this ETF? Am I going to sell it? Or am I going to buy some more? Also, I've got a free spreadsheet down below. If you guys want to take it, use it for your own personal use for tracking your portfolio. If you want the fancy bells and whistles spreadsheet that I'm using in this video every single week, then you can check out my Patreon link down below. But let's get started into this episode and talk about the Bitcoin crash that happened this weekend. So as of right now, filming this video, on Sunday, there was a pretty big drop in Bitcoin, and this is because there's a battle between Elon Musk and the Bitcoin bulls. Essentially, there's a guy who goes by the name of Peter McSpaceship, and he wrote a tweet that was about 23 individual tweets long to Elon Musk, saying that he believes that Elon Musk was wrong about Bitcoin and how it's all powered by coal energy. Granted, I do believe there is some amount of miners out there, especially in China, that are powered by coal. However, when we look at the entire United States, there's still a lot of energy out there that's not green energy. It's powered by coal or nuclear or whatever else. And this energy is powering the plants to make Teslas as well as powering Teslas. So in a way, I think that this is an unfair argument that Elon Musk made that Bitcoin is powered by coal and is not a green currency. At the end of the day, the world is still trying to move towards more renewable energies and it'll take some time to get there. But one thing I do think that Bitcoin does bring to the energy grid is some sort of stability. The way that Hive is doing that right now is turning on their Ethereum miners, for example, at night, when there's some wasted energy by the coal power plant or whatever else they're using to generate their electricity. Things like wind and solar, you can't really predict when you're going to get those energies. When it happens, you have to use that power at that instance, or you can try to store it in batteries. But most power plants have not moved there yet, so that energy ultimately gets dumped. But if you can take that energy, harness it, and use it to power a financial system, then that is where we see the magic of cryptocurrencies. But back to the main story here of Elon Musk on Twitter with Bitcoin bulls. So Elon Musk responds to this guy, Peter McSpaceship, and there's a whole back and forth between the two of them. There may be some other side battles going on, but this is the main one that I saw out there. And ultimately we saw the price of Bitcoin go from $60,000 Canadian down to about $52,000 as of when I'm filming this. It's kind of crazy to me how one man can have so much power. A couple tweets from him, and this asset that's worth almost $1 trillion in total tanks by about 10% or 15%. Granted, Elon never asked for this power, it was just kind of given to him by social media and how people just love this guy. So there's a lot of loyal followers that will do anything that Elon Musk says. But I think at the end of the day, what you have to do if you're looking at this on the sidelines and trying to figure out what to do next is do your own research and don't just take someone else's opinion. So I've done my research on Bitcoin and I only know so much, but based on the knowledge that I have, I'm still going to continue investing in Bitcoin. First of all, the stock to flow model that I follow fairly closely, I do believe that it relatively accurately predicts Bitcoin's price. So it's done that in 2017 as well as the previous bull run before that. So I do believe for this time round, the stock to flow model will be relatively accurate and today's action is just a little blip in the entire bull run. Yes, we may pull back fairly significantly, and for those people who bought in near the top, it's going to suck a bit. However, for me personally, I think that I'm going to continue buying this dip in my TFSA portfolio. Again, as I told you guys in the series, Bitcoin is a short-term play for me, and I plan to get out maybe 3 to 6 months from now. However, now is not the time to get out for me because I see a lot of extreme fear out there. And when the market is fearful, that's when I'm going to buy. At the same time, I am managing my risk. I'm not just going out there, dumping my entire portfolio and putting it into the Bitcoin ETF. I have it as a portion of my portfolio and it's starting to become a larger portion just because I have high conviction about this play. Yes, I could ultimately be wrong because I don't know what the future is going to hold. However, as I said before, I've done my research. I do have a belief that Bitcoin will go higher from here. And this short-term drop in Bitcoin's price is not going to deter me away from buying more. In fact, it's going to encourage me to buy more to dollar cost averaging and bring down my cost basis. Another indicator that I follow for Bitcoin, as I mentioned before, is Google Trends. And looking at Google Trends, we have not yet hit the search volumes of 2017. And in 2020, I do think that there's going to be a higher search volume versus 2017 because there's more people that know about Bitcoin or that are going to know about it. So when everyone's starting to rush into Bitcoin because of all the FOMO, we're going to see a spike in Google's search volume for Bitcoin. And that's when I know it's going to be close to the end of the Bitcoin bull run. Or at least that's what I'm looking for right now. Another concern people might have is that Bitcoin miners predominantly reside in China. And with China's government being able to take over any sort of entity in there at their own will, people see this as a huge risk to Bitcoin. It's not only Bitcoin though, Ethereum is also mined there, so this is a big risk for Ethereum as well. However, these miners are not loyal to a state, they're actually loyal to the mining pools that they're part of, as well as the fees that they get. So these miners won't just yield to China, they'll pick up and go and leave the country if they have to. All these miners really care about is that they're getting a return on investment. And there have already been some miners who have left China because of all the political risks, and they've sought asylum in places like Canada. I've linked a few other articles down below on Bitcoin, so if you want to, you can check them out after this video. So that's what I'm seeing out there in the crypto space. Again, this is my opinion, not investment advice. So if you're going to go invest in the Bitcoin ETF, please do your own research. It's a highly risky asset, so all I'm going to ask you to do is to manage your risk. Now let's jump over to my portfolio and see what happened this past week. So we're here in my portfolio, and you can see the total market value is just over $3,500. The total book value is just over $3,600, meaning I'm actually down on this portfolio by around 3.4%. If I instead invested in the TSX index or an ETF like that, I would be up around 2.07%. So let's talk about why my portfolio is down and just look at the breakdown to see which stocks are performing the worst and which ones are performing better. So if I'm sorting the spreadsheet here by percentage of returns, we can see at the very bottom, the stocks that are lagging are Enghouse, WELL Health Technologies, Kinaxis, and Algonquin Power Corp. And for me, I'm not too worried about these three companies, as they have great management teams, they have the financials to be able to keep them going throughout this time where the stock price is lagging. And honestly, the market doesn't always get the price of these stocks right. The market is typically forwards looking, and there's a lot of different parties that are buying and selling into these stocks. And ultimately, what drives the stock price is supply versus demand. So right now, there seems to be a lag in demand for higher growth technology stocks, and that's where we're seeing these three sell off. Algonquin Power Corp, on the other hand, has also sold off this week. Just a couple weeks ago, the stock was sitting around $20 per share, which is just at where my cost basis is. And today, while filming on Sunday, it sits at $18.60. And I just checked Algonquin Power Corp and why the stock might be down. It seems like earnings just came out, and there is a few news items in here. So for the most part, all the corporate highlights seem relatively positive. They increased their common share dividend by about 10% to 68 cents. They completed a bunch of initiatives as well as a bunch of projects. So these are all pretty fine and dandy. However, I believe that Algonquin Power Corp does have operations in Texas, and they got hit by that. And I think investors are now just seeing the effects of it on their financials. But they don't look too bad, to be honest. The revenues were around $634 million for the quarter, which is an increase of 36%. Now, for any utilities company, seeing an increase of 36% is typically unheard of. However, I believe this is mostly due to some acquisitions that they made in the previous year. They had an adjusted EBITDA of $282.9 million, which is an increase of 17%. So it looks like revenues were growing faster than EBITDA, which means that there's some expenses that are growing faster than the revenues. They had adjusted net earnings of $124 million, which is an increase of 21%, again, slower than the revenue increase. I looked at their financial statements, and maybe this is a worry that investors have. Just looking at their assets, their current assets are around $804 million. However, their current liabilities are at $1.4 billion, meaning that Algonquin Power Corp is going to need some sort of infusion of cash, whether that's cash flow from operations or from another capital raise, in order to cover their current liabilities, which are due this year. However, going back to the earnings report, we can see that at the very bottom on April 9th, which is after the end of this quarter, after March 31st, they raised around $400 million in an unsecured debenture, which bears interest of 2.85%. So Algonquin Power Corp got this loan of $400 million at a 2.85% interest, which is honestly pretty good in my opinion because the maturity is all the way out to July 15th. So they've locked in this low interest rate for the next 10 years. In looking at the stock price, we can see over the past week, the stock has declined around 3.83%, which is quite a large move for Algonquin Power Corp. Right now, if you were to buy the stock, you get a dividend yield of 4.46%. And this week, I'm actually looking to buy a few more shares of Algonquin Power Corp just because it's come down in price, and that ultimately means we've reduced risk. Now looking at the 1-year chart, we can see that in the past year, Algonquin Power Corp was at lows trading around $18.27 or so. So we're approaching those previous lows in the past year. Now over 5 years, the stock has moved up about 58.7%. So not any sort of crazy returns. However, you are getting a dividend yield of 4.46. Looking at the P ratio is 11.06, which is relatively low for a company that's growing its revenues by about 36%. So Algonquin Power Corp is going to be one of the stocks that I'm buying this week to be able to bring down my cost basis. And as I said earlier, I'm going to continue buying into the Bitcoin ETF and continue lowering my cost basis after the catastrophic events of this weekend where Bitcoin dropped to about $52,000 Canadian. Hopefully it opens somewhere around there on Monday morning when the market opens, but we'll see. And if that is so, then it's going to drop into the $8 range for sure. Because on Friday, Bitcoin was trading somewhere around the high 50,000s or low 60,000s, and it was at $9.09. With a 10 to 15% drop in the price over the weekend, then we're going to definitely see this dip into the $8 range. As for the stocks that I bought last week, we can see the transactions here. I bought these 3 shares, Power Corp Canada, Dollarama, as well as some Bitcoin ETF at $9.13 per share. I bought some Dollarama because it dropped significantly. We can see over here Dollarama on line 13. It's down 6.17% for my portfolio. I currently have 5 shares, a book value of just under $300, and a cost basis of $56.52. Right now, the current price is $53, so if it continues to dip this week, perhaps I will split some of my $200 into more Dollarama shares, as I'm relatively bullish on this dollar store stock for the future. But again, whatever I buy in here in this portfolio is not investment advice. I'm buying these stocks because I've done some research into them, I have theses behind each one, and I'm willing to hold most of them for the long terms, minus the Bitcoin ETF, which I've mentioned before is a short-term swing play. Before we end off this video, I've got a question for you guys. What would you like to see going forwards with these Monday videos? Do you want me to review some major market news, just talk about my portfolio, or do some beginner tips every single time? If this video was of any value to you, remember to leave a like down below. I'll throw up 2 videos on the screen for you guys to check out. If you're there, I'll see you there. If not, keep up the grind and have a great day.